Well, good afternoon, everybody, and welcome to the Fat Tuesday edition of Bull Sessions. It's March 1st. It's the first day of Lent for people who are involved in that area. And it's the first day. I think, I don't know if Mardi Gras is today or tomorrow or if it's started, but it certainly is a happening thing. And
Mardi, Tuesday, Mardi. That means Tuesday, Mark.
okay, so it's underway.
Yep.
Okay, well, now I
Mardi
know.
Gras means Fat Tuesday.
All right. Well, welcome everybody. My name is Mark Robertson. The voice you just heard was Ken Kavula. Good afternoon, Ken.
Good afternoon. And we're looking at Punchkis and Mardi Gras, both
Oh,
on the front slide here. So
incredibly festive. Is it festive in Pennsylvania, Sean?
It just smells like Hershey chocolates out in Hershey, PA here.
That's a constant for you.
About as yep, about as close as we get to Fat Tuesday.
Well, thanks for your help last weekend. Last week, Sean Mace has been working on some stuff for Manifest, and you're going to see more from him. I don't know, the bull up in the header has actually found his way to the beads on the streets of New Orleans, so he looks a little bit ashamed of himself, but not much. So yeah, we're going to talk about a few things. So we do have our annual roundtable, kind of our performance edition tonight, and one of the sub themes of what we'll talk about here this afternoon is this notion of performing in plain sight, because everything we do for the roundtable is out there in the wide open, the stocks that we share and study, and we're going to have actually 6 presentations tonight. But we'll take a little bit of a look back. So yeah, we've got the parade happening. We've got that little bit of a teaser with the creatures from Activision Blizzard in the middle of the screen. And yes, that is a Punchki, or a modified Punchki on the far right, again, in honor of today.
Dwight is telling me that Wisconsin has declared this to be Punchki Day. And he's claiming it all for just Wisconsin. So he says you can go to Facebook and find that if you want to. But I'm sure that the groups in Michigan would disagree. The second largest Polish-speaking community in the world resides in Wayne County, Michigan. So
very familiar, yeah. Well,
only larger community is Warsaw. So,
Dwight, if you don't behave yourself, the invasion will start from the Upper Peninsula.
well, they got to get through the Finlanders up there. I don't know. We'll have to see.
That might be tough this time of year.
Yeah, it might be.
All right, a moment of levity, a moment of seriousness. No investment recommendation is intended. This is an educational demonstration. It's about education and illustration, attempting to share the lessons learned by over 8 decades of the successful modern investment club movement. We're basically going to be talking about, at least tangentially, if not specifically, the methods and analysis techniques used by the modern investment club movement as championed by the National Association of Investors, now known as Better Investing, and as interpreted and promulgated on Fat Tuesday by Manifest Investing. You'll hear opinions from us. Please do your own homework before making an investment decision. If we hold a security in our portfolios, we'll attempt to remember to disclose that. Tonight is our annual round table black tie and red carpet event. You're wholeheartedly invited to join us. We'll talk a little bit more about that here in a minute. If you'd like to be added to a reminder list about our monthly webcasts where we share stock ideas, please send an email to nkavula1@comcast.net. And then at the bottom, my email address and Ken's email address if you have anything on your mind. Anything you want to add, Ken?
No, I think that pretty well sums it up, Mark. I'm looking forward to this evening, and I think I will have a couple of beverages of choice ready to go, depending on the results of some of the awards tonight,
Well, if we're going to have beverages of our choice and then we're going to be loaded up on these babies, we're going to be bouncing off the wall tonight, Tuesday. I think this is the first time I can think of in 12 years that Fat Tuesday has coincided with this event. I don't remember it happening before. So, whatever. All right. A quick reminder that we do have a bullpen of topics that we will be tackling. Today, we are going to talk a little bit about the roundtable. Again, investing in plain sight. Just a moment, maybe a little bit of a tease on Warren Buffett's annual letter to his shareholders at Berkshire Hathaway. And again, our standing segments on best small companies and the groundhog. And again, if you have a topic that you'd like to see us tackle in a little bit more depth, and we'd be happy to go after that. And see right there, though, he's definitely blushing on this slide, Ken. We are going to go after Tin Cup, and no, that is not why Tin Cup is named Tin Cup, but I like Rene Rousseau and Kevin Costner, so we just let that happen. Tin Cup. So we'll take a little bit of a look at Tin Cup also. All right, here's our weekly reminder. Sometimes we switch out this chart, but I still don't want to switch it out. I want to point out that yeah, the green bars basically approach the blue lines, probably will for the foreseeable. And they don't always do it in a straight order fashion. There's a lot of zigging and zagging that goes along. The projected return for most of the stocks that you study these days is going to be fairly typical, pretty close to that midpoint in the range of somewhere around 10 to 12% on average. And that's just our quick reminder that we're basically back into a place like that. We're not exaggerated in an extreme way in either direction. So that's just a quick reminder.
I was reminded last evening, Mark, about how a lot of amateurs can feel that the market is just full of screaming buys right now, when in fact it's just about where it's been on average for a huge long period of time of history. I mean, a screaming buy looks like those points that are up there around 20-24%. But when you're looking at a appreciation number just over the 10 mark, I just don't think there's anything really on sale. I think it's just a pretty normal market at the moment. Maybe it does indicate that we were sitting quite a ways below that 10% for roughly the last year. So very interesting chart to follow, and it's not, I don't think it's very predictive, but it's a very interesting set of data points to take a look at and to keep in the back of your mind.
Yeah, the only prediction I make is that it will eventually, those green bars will basically track that blue line. The other thing I find fascinating
I
about
thought you were going to say that it will fluctuate, Mark.
yeah, it will. And in fact,
Yeah.
I'm saying that the market will fluctuate this afternoon. The other thing I think that we find interesting about those two peak points when a lot of stocks were attractive to us, the way that we look at the world, is the other thing that those 2 points share in common is people either were not talking about stocks or they were talking about how much they hated stocks. At those 2 points, those two peak points that Ken has mentioned up here at the top. So that's how you listen for that to be the case, and then you go shopping. All right. Quick little fun fact, and it's just literally here to remind you that what's happening in Europe has other implications. The country of Ukraine is actually among the top grain producers in the world. And the three main countries that are involved here are among the most productive when it comes to fertilizer for farming. So connect the dots. I mean, I actually have a friend who's in farming that has not ever seen anything like it. He's concerned about break even in a big way for this year. So these things do have implications. It kind of ripple waves through all kinds of stuff. And just a reminder.
I heard a good way to think about Ukraine, Mark, and think of it as having a soil akin to the soil in Iowa, where you can grow, acres after acres after acres of grain of all different types. But think of it as being the size of Texas,
Yep.
because that's essentially how big Ukraine is. So you have a country the size of Texas with arable land mass that's that same size. So you can begin to get an understanding then of how they can become a huge producer of food. They've been known historically as the breadbasket of Europe. So it's a really important place to geographically and economically for a lot of people.
And I guess we can just hope for a good resolution as soon as possible. All right, so continuing on with the theme, just really quick, just capturing the spirit or dispirit of the market right now. Article came out from Ben Carlson here in the last week or so, and it's just kind of a recap of if you're looking for things to be bothered about, make sure that you've got all of these on your list. The one that I kind of take a little bit of exception about being arguably in the craziest housing market ever. Yeah, it's weird, but I'm old enough to remember 15 years ago, and that was pretty crazy too. And so I would argue.
Yeah, I think in the last 30 or 40 years, there's been a number of times when I think you could point to crazy housing markets. I mean, I think it was pretty crazy when you couldn't afford to get into a house with anything less than a 17, 18, 19% mortgage. So that was a pretty crazy market at that time in history too, and that goes back only to the late 70s, early 80s.
Yeah, and so this all comes back to this notion we've said it several times over the last few weeks. Sean and I covered it along with Matt last week about this notion of just keep doing what you're doing, and that's find excellent companies and buy them when they're on sale, and you'll be fine. Because I don't, Sean, were you able to stay with us?
Yep, I'm still here.
Because all of those bullet points on that slide, there's like 17 corrections on this chart, and every single one of those things that was itemized as something to worry about, and I just look at the green lines and the blue lines, and it's just
Stay the course.
Take a deep breath. So yeah, so it's as you're thinking, you're always looking for ways to encourage young people to invest, and a lot of people now are saying, well, things are just too crazy. And I guess I would argue things are always crazy.
You'll tell me a time or a period when things weren't crazy. I mean, especially in that date and time. We can go back. What, COVID happened 2 years ago now?
Mm-hmm.
During that time, stock market still went up even after it dropped.
Yeah, and even in the face of skirmishes around the world, going back multiple decades, all kinds of stuff like that. Interest rates have gone up and gone down.
I think we've technically called this buy the dip.
Yeah, there you go. but buy the right dip, and the right kind of dip to go looking for.
Absolutely.
Again,
it's been easy to go out. It's been easy to go out searching too, Mark, for the constant repetition of the phrase "it's different this time." Going back as far as you want to go back, I think that maybe it's just normal for people to think they live in the most interesting times that there ever was, but that phrase just keeps rearing its ugly head every year and a half, 2 years, that something important makes it different this time. Yeah. And maybe the very difference makes it all the same, huh?
Well, a big portion of this is also that there are companies that are doing great out there right now, and nothing's changed. They're just a victim of the market. Home Depot is a great example of that. I think First Financial, Ken, the one that you like, is a good example of that. They're just victims of the overall market, and it's a good time to buy the dip.
Yeah, and the reason I threw this slide in here is just to capture a quick moment. This is actually from a presentation by Ben Carlson. He actually made it in Traverse City, by the way, to the Economic Club in Traverse City. And he's citing this book by Charles Ellis. I love some of the stuff that Charles has compiled over the years. This book was a little bit more institutional than I would like, and I typically don't find investing to be quite as exhausting as what he's pointing out here. But the thing that Ben pointed out that I can really relate to is the difference between, professional investors slash traders and we amateurs. And, keep in mind that those professionals are really under the microscope with respect to performance quarter to quarter. They're really on some type of a clock, if you want to think of it that way. And, you contrast that to, what the advantage that we have of we can just sit there and wait for the right pitch, as Cy Lynch might put it. And the way that he captures that is comparing it to tennis. And tennis is one of my favorite sports, and I can certainly relate to it. The difference between a professional and an amateur is that amateurs basically are always trying to hit a winning shot, and they basically lose 80% of the points. Professionals basically are always trying to hit that shot to be a winner, but the amateurs are basically getting beat by themselves, making mistakes. Unforced errors is what they refer to them. And you don't have to do that. You can just simply again fall back on what has worked for over 8 decades. Find high quality companies and buy them when they're on sale. We will cover that when we talk a little bit about Tin Cup here in a few minutes. So,
Did you, Mark? I'm looking at this book and I'm remembering that it's one of the few investing books that I've purchased along the way that I couldn't get through. Did you find that he really had a lot of strategies? I know he laid out a lot of problems, but did you find out that he had a lot of really winning strategies in this particular book, Ellis?
well, that's where it really breaks down for me because he falls into the club. I won't call it a mistake, but the club of asset allocation, and basically saying that everything depends on your success depends on asset allocation, and we don't necessarily believe that.
Well, I also don't think he necessarily believes that a non-professional can do something consistently over a long period of time. I also don't think he believes in the staying power of individual investors. He's kind of cynical about amateurs and how they can win at the stock market game.
Oh, definitely. And that definitely permeates a whole lot of the industry. So he's not alone there.
Yeah.
All right. So let's talk about amateurs actually doing fairly well. Here's a case of Tin Cup. And it is time for that Tin Cup update. So I just thought I'd walk you through the update for this month. And we are back at virtually 4 million. We've been teetering above and below 4 million for weeks now. Getting as low as 3.6, getting as high as 4.3 within the last 2 weeks. That's how much it's actually gyrating around. But this is a list of the holdings in Tin Cup and some fairly good household names, but fairly decent portfolio. The way that we tend to think of portfolios, I think it's fairly well positioned for the future. What are your thoughts as you look over this over, Ken?
Well, when did Carmart join Tin Cup, Mark? Is that a relatively recent addition?
Relatively new, probably along the same time frame as our best small companies.
Okay, because I'm really kind of sold on that particular company, but the general car industry, if you will, the retailers that are trying to sell used cars and new cars, I'm I'm feeling really good about that industry. It makes for a very surprising and interesting group of stocks to study, especially study them as a group. First of all, when I got across that industry about 6 months ago, I was very surprised by how consistent the earnings and the sales were in a lot of these particular companies. But I'm thinking to myself now, with today's shortages and everything, that all they're doing is building up a huge kind of a plug in the supply that at some point is going to pop out like a cork in a champagne bottle. And I think that we're going to see some extreme profitability from some of these used car, especially the national players, and some of these used car companies like Carmart, and also some of the companies that are trying to put together national dealerships for new cars. Lithia Motors is the name. LAD is the ticker
Mm-hmm.
that you might look at. I really like this set of companies. Folks, I think if you're looking at this set of stocks, and if you don't own 6 or 8 of them in your portfolio, I think maybe I don't want to cast aspersions before I see what you actually do hold, but I would think that any good, solid, better investing or growth portfolio would hold 6 or 8 of these names or more. I'm counting down the list, and I own 12 of them in my in my own IRA portfolio, and that's without watching this on a regular basis. This is one good, well-crafted portfolio that seems to be basically running itself, right, Mark?
Yep, we only make changes once a month. Here's a look at the longer term performance. You can see we've been percolating right around $4 million. The market actually took quite a hit last month. This portfolio actually gained a tiny bit. If you look to the far right up there in the far right of the blue graphic, it is down to 3.9 this afternoon, but that's all part of the fluctuation thing. It is beating the market by about 5 percentage points, and that's really interesting considering that we probably more closely track that value line arithmetic average, trying to stay ahead of that than the general stock market. So pretty good stuff. So here's the decision for this month. I'm glad you like America's Car-Mart, Ken. We are going to go ahead and basically use the cash to add 80 shares. We would typically avoid a company that's color-coded in yellow over here. As you see on the far right, the projected annual return is kind of in nosebleed territory, but every once in a while we will give an exception, basically a free pass, if the quality is sufficiently high enough. We would never invest in a company that had a low quality rating with a high par, again, thinking that is potentially too good to be true, but we'll go ahead and accumulate that one, principally because a lot of these other ones, including Google and Boston Beer, these are fairly full positions, and this one is only at 4.4 going into it. So we'll be accumulating America's Car-Mart and hoping. The price has been dropping. I mean, it's been getting hammered, much like Sean was mentioning with some of these companies, Boston Beer being another one. Long term, they probably look okay, and the stock prices continue to plummet. And that just makes us giddy for the long term.
I love that second one on the list, Mark. So
yeah, I know we're going to hear more about that tonight. Foreshadowing. All right, last week we did a quick screen and got quite a few cards and letters, almost all of them positive. Actually, they were all positive, Ken. Described it as a situational screen where we wanted to just sort amongst the core companies. You know, with the turbulence and what's going on in the world right now, it makes sense to have a sufficient amount of your portfolio in core companies. And as we described last week, that is, we look at the sum of the quality ranking, the financial strength, and the earnings per share stability. Add those numbers up, and if they're higher than 225, we think you may be looking at a core company. That's what this column is right here. So you're basically looking at the top ranked companies that also potentially, at least mathematically, potentially qualify as triple play candidates. And I'm not going to go into triple play. We covered that last week. But these are 20 companies that are pretty highly regarded, that some of these are probably worthy of further study, especially if you're looking to add core companies to your portfolio. And Ken, you have to, do you want me to put this slide in the presentation for tonight?
I maybe need the last slide and this slide in my presentation tonight, Mark.
Well, we can do that. We can do that.
I knew it was going to score near the top, and a lot of these screens we were doing, I didn't realize it was going to come out as high as it's coming out. That's great.
Yeah. So again, a good shopping list, and many of you, well, not many, a few of you have written to us saying, it would be great to see, screens like this or variants of this from time to time, if not a regular feature during these bull sessions. So we'll keep that in mind.
I'll tell you another one that I'm really high on right now, Mark, and I'm awfully glad to see it appear on this screen, and with a high prove number and with a pretty high par number. because I think it's in an industry that people are overlooking at the present time, and they're not considering the quality of the company itself, and that's Expeditors International. It's a little bit less than halfway down the list in the light blue background down there, right in the middle of that. But I think this is a wonderful company to take a serious look at. Really, really good numbers going forward. I noticed that the ACE return is, the analysts seem to be on the lower side of a lot of the things that I'm putting together and looking at. I especially like this company because it's trading near its all-time, or not all-time, but 52-week low. So it's a very interesting company, and it's always been a community favorite for the last, I don't know, 15, 20 years. Don't you think that's correct, Mark?
Yeah, and Sean, you were asking about FedEx earlier.
Yes.
This community likes this company, and maybe a side-by-side comparison at some point makes some sense too.
Oh, yeah. No, this is definitely on my short list to do a 60-second analysis on.
Okay.
Yeah, the biggest difference is that Expeditors is asset light. They don't own trucks and distribution centers and all that kind of stuff. They handle the paperwork for everybody else that has the assets. So that's a very real difference between it and some of the other companies you might look at, like FedEx or UPS or something like that,
Yeah, and one of the
or the
other things,
truckers for that matter. Yeah.
I'm just going to add it to my to-do list. I'm sure that my honey will move it down the list, but I do want to study the efficacy of those 1-year analyst consensus estimates at some point and give us some research and some data we can sink our teeth into.
Well, that's the number, Mark, that when you put together these charts, an awful lot of times it comes out really squirrely compared to the rest of the data that's on the chart.
I'll
I'm
tell you what's really,
surprised so often that it's really higher, so much higher than the analysis that we're doing, you know.
I'll tell you what's really squirrely is right next to it, same company, an incredibly optimistic long-term perspective at 54% on price to fair value. Those two numbers don't go together very well. So, for what it's worth. All right, your quick groundhog update. Again, this is the official scoring. I am building out the dashboards. It should be finished within the next day or so. But yeah, some regular names up at the top. George Mackey was the number 1 last week. He's still in the top 4. Sean, congratulations for getting up to number 10 there.
I'm not beating out the monkey yet, though.
No, we'll talk about the monkey in a minute. The monkey is annoying. But Nick DiVirgilio is back on the list. Andrew Spector and Curtis Ayers are fairly recent champions. Just a lot of very familiar names, along with a few promising new names. And for those of you that are concerned, Kim, Ken, and I are among the participants beating the stock market. So we're just off this chart a little bit. So
Hooray!
hopefully we'll be joining you in here fairly soon. And you can see that Herb's Sin Soap and Soup is still on the list, but he dropped down a little bit. But good stuff. But the thing to point out, remember, we came in under 20%. And I told you 60 to 80 is something we're more used to over the years. So it's good to see that returning to a better number. And then I find this kind of fascinating. Kathy went from 150th to 81st this week. So we'll keep hoping that, because that means innovative and growth stocks are doing a little bit better. All right. And yes, here's our tribute to the monkey, Graham Steffens' entry into this contest of the dart tossing monkey. And yes, it is a new clear and present danger.
Yeah. I promised myself, Mark, that when we got to a best small company screen like this one, that we would also try to remember to mention how the Russell 2000 is doing, because it's had kind of a renaissance in the last 2 or 3 weeks. It even on days when the market is swinging, wildly in one direction or another, the Russell seems to move in the winning direction and then end up near the top of the percentage gainers as far as the index funds are concerned, or first or second. The Russell seems to be really outperforming in this time of great volatility. So I would urge folks to not forget that that's a pretty nice indicator of how small companies are doing.
Yeah, I suppose I could add the Russell 2000 to that. My only hesitation is that there's a fair amount of distressed merchandise in there too. So
Yeah, there's a lot of companies that don't make money. You're absolutely right. But it's nice to see that blue bar up approximately even with the green bar. And we know the reason for the difference between the red and the blue. It's one stock. So very interesting. Very, very interesting.
yeah, we added Pachira, we sold eHealth, and in fact, there's maybe this will come back to haunt us, Ken, but there's quite a Vladimir Putin content on the eHealth presentation. So maybe that was prescient. All right. The one thing I did want to point out, talk about car stuff. I didn't sort these. I left them in the order that they were. So that tells you that this one's been hot. And if it's in your groundhog portfolio, you're probably on the leaderboard.
I'll tell you another one that's been hot, and it's hidden on this particular chart because it went from deep red to just almost green, and that's Medifast. Have you been watching the movement in Medifast? I see that it's now relative return wise actually turned green. It's really had a good maybe last 10 days, 15 days. Very interesting because that doubt that I had about its business model seems not to be disturbing very many other people.
Malibu Boats too has been rising with the tide.
Yep. Okay.
I'm not.
I will tell you, Mark, that after spending a week down in Palm Beach and driving the ocean roads and looking at the different marinas and everything, I will tell you, I know why Malibu Boats sells so many boats. It's just amazing the size and scope of the boats sitting in the water off of that coast from, I don't know, from maybe Delray Beach up to Boynton Beach. Millions and probably billions of dollars in high-level yachts, and I wouldn't even call the size of some of these yachts. We took a tour boat through past I forgot his first name, but he's Wynn out of Wynn's Casino.
Mm-hmm.
And he owns an aircraft carrier almost. So it's just, boy, is it a big boat. So you can see where Malibu is getting its income from, no doubt.
Well, I know that when the ladies up at Porta Value Investment Club in Elk Rapids, Michigan, they know their boats and they like it. So
Yep.
Charlene
Yep.
and the gang, good stuff. All right. I don't know. Did you get a chance to take a look at Warren's letter at all, Ken? It's pretty short this year.
No, I didn't, Mark. I have a granddaughter that's moving into her first apartment, and I don't know if you remember those days, but it's a constant sitting down for advice and questions and everything else. So I've been quite engaged in making sure that she gets into an apartment without getting ripped off. So
Yeah, I don't think those days ever end, Ken, thankfully, and whatever it takes. Anyhow, his letter is out. It's out a little bit earlier than usual, considering that we're a couple months away from the meeting. As far as I know, the meeting is still right around May 1st. So I just grabbed a couple points really quickly, just as kind of a tease. We might come back and do a little bit deeper dive here, but this quote from the first page of his letter, and he writes it as if Charlie and he are speaking. I really think this is a cool quote, and it kind of captures this notion of not being stock pickers, business pickers. I like it.
I think it moves into some of our classes, Mark.
Yeah, I
The
mean,
especially
what's wrong with that
the
quote?
very last the very last sentence I think moves right into some of the classes that's what we have to try to that's what we're trying to teach people is to analyze the business, not the market.
Yeah, and then he goes into and he starts off with talking about their four giants, their largest investments, Geico and all the various insurance companies being one, represented there by the lizard. But Apple, they have a large stake in Apple. They bought the entire Burlington Northern Santa Fe Railroad, and then uh, actually the Berkshire Hathaway Energy (BHE) is becoming quite a player. The pieces that they've put together there, so that is part of it. We may go in and look at those pieces also, and then I've also included their actual equity portfolio here, just as a quick update, because we were asking questions last week or 2 weeks ago about if Wells Fargo was still in here, and I do need to dig into others a bit, but just thought we might see if there's anything that jumps out and grabs us from this going forward. It's largely unchanged from my recollection over the years.
Wow, something I'm noticing here is for that others, that cost, that's still 25% that they're not accounting for, or what we know of that they have.
Yeah, you mean you're talking about this number here, Sean? This is a big number.
Yes.
Yeah, that's because those are probably relatively new. You know, the investment in Coca-Cola goes all the way back to the late 1980s. So that's why this number is so small and becoming this number. It's a little bit of foreshadowing for what we're going to look back at here in a minute. And even the number for Apple, relatively new investments in Apple within the last 10 years. So I think that those others consist of quite a few relatively recent purchases. All right. Any other thoughts, Ken?
Still pretty bank heavy. I'm surprised that he has stayed with as many banks as he has stayed with, and a pretty good holding in communications too. When you look through the whole list, Verizon's not the only one on the list that, even though it's kind of sticks out at me, but uh, it's a very conservative list of companies,
Mm-hmm.
and at the same time, you can't fault it for the kind of return.
Okay, so we'll probably come back and spend a little bit more time with it. And here's a quick reminder before we look at our closing slide about we do archive all of these sessions at Manifest Investing. You're invited. Please consider subscribing to the page. That helps us in that count. We do put all the bull sessions, all of the roundtables, and any of the successful investing conferences. And on that page, and this is what we wanted to tell you about, Ken, Sean has been putting his 45 or 60-second analyses of companies. And we'll have a couple more up there fairly soon. And again, I'm kind of capturing this notion that we'll probably explore in greater detail of Peter Lynch says that we ought to be able to explain an ownership in a company much like you would if you were talking to a fifth grader or whatever using crayons. And so we like those two themes. We'll probably be talking more about it. The shorts are actually displayed on the page. Anything that we ought to look for there, Sean?
Nope. My goal is to get at least 2 of these out a week. So hopefully we can build up quite a bit of stocks for people to quickly analyze. And if you just scroll all the way down to the bottom of the YouTube page, you'll see the short section there.
Mark, wasn't Lynch's quote focused on explaining in a minute in language that a fifth grader could understand what a company does?
Exactly. Yeah.
Okay, so that it's not so much the business model, it's not so much the ins and outs uh, of the financing or anything like that, but it is making a really great stab at telling you what exactly it is that the company sells in order to make money, whether it's a service or a product or whatever it is, and to do it without using a lot of catchphrases and a lot of gobbledygook in your language.
Yeah, and I think there is the potential to take and boil down, the way we do a stock study into an executive summary that can be that quick hitting. That's kind of what we're tinkering with, and Sean has kind of opened up this area to tinker with, and we'll see where it goes.
I agree. Our very best presentations, a lot of times in the roundtable, have been some of the shortest that exist. We don't have to take the entire investor's presentation and break it down into 25 slides and go through each one of them. So it's
Mm-hmm.
I like, and don't get me wrong, I really like it when an expert in the field takes a company and takes a real deep dive. Hugh has done some wonderful things in talking about drugs and drug stocks, and just the whole idea of small molecules versus large molecules, explaining that. But a lot of times you just want a simple platform to build the rest of your story on, and you don't need to know every single thing they do and every single financial move they've made in the last couple of years. You do like to know a little bit about how they make money and what they're selling, and there we go.
Absolutely. All right, so thanks, Sean. We'll keep
Thank you,
chugging.
Mark.
All right, as Ken has already alluded, we will be having our red carpet black tie. Although I don't think I own a black tie, Ken, unless you want to loan me one.
No, okay.
But that is this evening, and you're all invited. Most of the people here in attendance are quite familiar with our roundtables, and I wasn't comfortable putting beads on you, Ken, so I went with the trumpet.
I got a trumpet. Okay, all right.
All right, and just for the audience, these are the awards that we covered tonight. Basically, handing out these awards and check in and see how people fare. All right, and with that, I think we'll use this one to close. This is actually from the roundtable also, and I think it really is a powerful slide. We talk about the rates of return and all that kind of stuff tonight, but this is illustrating the positions. What happened to $1,000 invested in these companies over time, and these are the 20 best results in approximately 12 years with the roundtable. You can see why Microsoft is at the top of the chart between Ken and Hugh. Those single $1,000 investments are now north of $60,000 when you add them up, and the specifics are right there in full view. And you hear us talk about the single time purchase of Costco. There it is. And then there's just a number of other companies which bring a bit of a glow to us. Your thoughts, Ken?
It's eminently interesting that we have a set of companies on here that, except for maybe one company, I think we could, well, maybe two, we could say that they're known to the community. They've been out there, and all you had to do was put some money down on any one of them, and you could have done a really, quite well. I mean, NetEase and S&P Global might be ones that the community doesn't know as well as it knows a lot of the others. But I mean, come on, we're talking about Microsoft and Costco and Amazon and Universal Display and Apple and Google. What's not to like?
Oh, there you said it again.
I know. I deliberately said it again.
And what I also find fascinating is, the appearance of a company like NetEase. I'm not sure how high that was on size radar screen until you brought it up, Ken. And I know that was a major holding at the Mid-Michigan Club, the Model Club.
It was a major holding for a long time. It was the stock that for 6 or 8 years kept us moving well ahead of the market. I mean, well ahead of the market. But like all good things, some stocks have a twilight, and this company ran into some real problems. This is not an American company. It's a Chinese company, and it ran into some serious issues with the Chinese government, and with gaming regulation by the Chinese government. This is a gaming stock, and we bought it when not every single person was sitting wherever they had a spare 2 moments playing games on their handheld device. We bought it when games were still something that only teenage boys were engaged in.
Hmm.
But it was certainly an interesting ride while it lasted. It's been a terrible performer most recently, and I would not recommend that very many people put it into their portfolio now. But it certainly had a lot of great things going for it in the period of that we owned it from 2012 to 2020. I think well, I'm not sure. Did we have more than a single position? Maybe not.
We may have. I don't recall. But
Yeah.
speaking of single positions, I just wanted to highlight a couple of dates. This is the oldest date of an active position that we have right now. It's right up there with SEIC, your choice, Ken, from that same year. And then the other one that I wanted to point out was, the point in time when Apple was added to the roundtable portfolio and the price. So take a cyber bow, Ken.
I would do that. What's not to like? Buy, at a $10
Careful.
Apple stock. So, and that's pre-split, Mark.
All right. Behave yourself. All right. So join us for the roundtable tonight. And we're going to leave today with thoughts and prayers aimed to the east. That happens to be the part of Ukraine that is not fields of grain and farmland. And it's quite an got quite an urban element to it also. So our thoughts and prayers are also there.
Is this Kiev, Mark?
It is. I'm pretty sure it is.
Okay, yeah.
I don't
These
know. I've never been
onion,
there. I've been to some of the surrounding countries. I've never actually been to Ukraine.
yeah, these onion domes are extremely distinctive of that part of Europe, all over that part of Eastern and Central Europe.
I assume it is. I mean, it's on the internet, so it must be true. I went searching for interesting pictures of Ukraine, and this is one that popped out at me. Or Kiev, I think, as far as I know. All right. Any other thoughts?
I'm looking at the question box, Mark, and maybe you want to put an end on it. We can have a couple of questions after the session here, if it's okay.
Okay. I'm going to go ahead and shut down. Thanks, everybody. Look forward to seeing you tonight.